Hello everyone, and welcome back to the channel. Today, we're taking a closer look at one of the biggest winners of the artificial intelligence revolution, Arista Networks, ticker symbol ANET. The stock has surged higher after another outstanding earnings report, and investors are asking an important question. Is Arista Networks still a buy, or has the stock become too expensive? In this video, we'll examine the company's financial performance, growth opportunities, risks, valuation, and long-term outlook. Arista Networks is a leading provider of cloud networking equipment and software. Its products are used in large data centers that power artificial intelligence applications, cloud computing, and high-speed networking. Some of the company's biggest customers include Meta, Microsoft, Oracle, AMD, and Broadcom. As these technology giants continue investing billions of dollars in AI infrastructure, Arista remains in a strong position to benefit from that trend. Arista recently delivered another impressive quarter. Revenue increased by 38% year over year, reaching approximately $3.04 billion. This result significantly exceeded analysts' expectations of about $2.83 billion. At the same time, earnings per share climbed to $1.02, beating Wall Street estimates of 89 cents. These numbers show that demand for Arista's products remains extremely strong. One of the most impressive aspects of Arista's business is its profitability. The company's adjusted operating margin increased from 47.8% to 49.9%, an extraordinary figure for a technology company. This means Arista is not simply generating revenue growth, it is also converting a large percentage of that revenue into profits. The company currently reports annual revenue of approximately $9 billion, net income of more than $3.5 billion. Artificial intelligence is creating enormous demand for faster and more powerful data centers. Arista recently introduced its new 1.6 terabit networking platform, which is specifically designed to support massive AI clusters. As companies continue spending heavily on AI infrastructure, Arista could become one of the biggest beneficiaries of this trend. This is one of the main reasons analysts remain extremely optimistic about the company's future. Despite all the positive news, investors should also be aware of several risks. First, the stock is trading at a price-to-earnings ratio of more than 65, which suggests that expectations are already extremely high. Second, a large portion of Arista's revenue depends on a relatively small number of major customers. Finally, any slowdown in artificial intelligence spending could have a significant impact on future growth. Although Arista's business remains exceptionally strong, valuation is becoming a major concern. Some analysts believe the stock is trading considerably above its fair value, meaning investors are already paying a premium for future growth. In other words, Arista must continue delivering outstanding results to justify its current share price. Arista Networks remains one of the strongest companies in the AI infrastructure industry. The company continues to produce rapid revenue growth, strong earnings, impressive profit margins, and innovative products. However, investors should remember that even great companies can become expensive investments. For long-term investors, Arista still appears attractive, especially if the stock experiences a pullback. What do you think about Arista Networks? Do you believe ANET could become one of the biggest AI winners of the decade? Let me know your thoughts in the comment section, and don't forget to like, subscribe, and turn on notifications for more stock market analysis videos. Thank you for watching, and I'll see you in the next video.